Welcome to my weekly review. You're looking at a daily chart of the S&P 500 index. I promise no rocket emojis. As my disclaimer is, this is an adult video, by the way, made for adults, not children. So grow up, be an adult, do your own due diligence. Don't be a whining little baby brat. Anyway, that's my disclaimer. If I told you to jump off a bridge, would you do it? As my dad said often. Anyway, you're looking at the daily chart of the S&P 500. You can see I have a line right through the 4,000 level. And that's just kind of like a line in the sand of where it's been trading, since last, I don't know, March, May, I don't know. It's been nearly a year. It just trades below it, trades above it up to 40, 40. I would say it's roughly like 42 to 38, that tight little 400-point range for mostly. Went up to 41 here in December, then pulled back to roughly 38, and then went up to 42 on February 2nd. Now has traded below it here at 39.70. So maybe it goes back to 38. Who knows? Just a lot of indecision there. Is the Fed gonna pause? And it rallies. The Fed is done, and then inflation's too high, and it comes back down. So whatever. Just a lot of, indecision. Same thing with the Nasdaq. A little less of time frame though. And I would say about the 11,000 area for like the last 6 months since last September. It made that low of 10,088 on October 13th and rallied up to 11.5 and then down to a retest of this low here at 10.2. And then in January, had this nice 15% run. We've had a 7% retracement since February 2nd high of 12,269. This is roughly a 50% retracement, maybe a little lower. We'll get 50%. And who knows, maybe it'll come back to the 11,000 and take out the 50. But if I get rid of these lines here and just kind of backdate it and then forward date it to yesterday's action, we can see that it landed, closed right just a tick below the 200. People were making a big deal about it. Oh, it's below the 200. Well, essentially it closed at it, 0.1% below. But, it could trade below the 50, and it could also bounce off the 200 and rally. I'd like to see it stay above if we're going to remain, on the long side. If you're going to short it, of course, you're hoping for it to go lower, but a 50% retracement of that move would be, pretty logical position for it to start to rally again. It's, it's not overbought anymore, the Nasdaq. Anyway, I don't want to talk about indexes. I want to talk about stocks. And I like the oil and gas, not the exploration stocks or the refiners. And when you're talking about gas, we're talking about moving gas. And the field services stocks have been doing well. No gas jokes, by the way. This is Tidewater. Made a high and then pulled back with the market weakness last week. And just talking about some of these gas movers, the pipeline stocks. This is INSW. Will be on the watch list. It's a little extended here. It's 5% above its 10 EMA, but you could see this symmetrical cup pattern looks pretty good. It did this, last year and then had a nice run. So maybe history will repeat. One of the stocks we had on our watch list at mcstockcharts.com was TRMD, and you could see why. This flattening out here and this, nice move higher. A nice cup pattern there, so good for the longs there. Weatherford is another one that I like. Just pulled back to its 21. We saw a lot of this on the strong stocks last week, just pullbacks to moving averages and finding support and moving higher. I'm going to show you more with the semiconductors as well. So the oil and gas, but you got to wait for the bounce because a stock like, Val came down to the 10, no bounce, 21, no bounce. 50, no bounce. It just kept slicing through all these moving averages. And by the way, if a stock is up 0.5% while the market's down 1 or 2%, that's not relative strength, folks. That's just shorts covering their bets and taking profits on a Friday before the weekend. That is not relative strength. You can see the that thing has had it was one of the leading stocks, had a nice breakout and then failed. And I'm going to get to that later on in this video as well. And you got to stay away from the exploration stocks too. This is Devon, just a mess. You can see the big pink volume bars, and these things top when their fundamentals look the best, and that's pretty normal. I want to get to the semiconductor stocks because it was led by NVIDIA, and I talked about these pullbacks to moving averages, and this one pulled back to its 21. I would say that was a bounce, and it found support and bounced, what, 14%? Yeah, with that good volume. So these are the stocks that I like. ACLS, you can see this one pull back to the 10, got a bounce. And then on Friday, it was down a big 1%, on lighter volume. So I would say that's holding up well. I would call that relative strength. And the same with ALGN, down 1%. Well, the Nasdaq was down, I think, nearly 2% yesterday. But anyway, it's holding its 10, and that's showing relative strength. But there's no bounce here. I mean, on Thursday, it bounced a little bit, but general market weakness is going to hold these things down, and that's why I cover the indexes, because 90% of the stocks are going to follow the index. We're just looking for those gems that are trying to buck the trend here. This is a AEHR, and this one had this Debo Samuel cut back and undercut and rally. Give you the little stiff arm here and spike the ball in the end zone. They did a secondary offering, which, young companies, growing companies are going to do that, I guess. It's not a young company, but it's a growing company right now. And anyway, it's down with the general market weakness. I'm going to throw SMCI in with the semiconductors, even though it's a data center. There was a short report, and it sliced its 50, and I sold it because there's no response, no nothing, just nothing but sellers on that short report. And the demise of the data centers is greatly exaggerated, as those rumors were dispelled by Wall Street and by AMD and NVIDIA. The rumors. So this was up after the NVIDIA report, and I talked about these bounces off the 21, and this one pulled back to the 21 last week and found support. Yeah, there was news, but made a new high on Friday, and that's a relative strength as well. You could see the relative strength line. So anyway, I didn't want to cover that one individually, so I just threw it in with the semiconductor group. Another group I want to look at is the auto manufacturer group, because this is the #1 group in 2023. Tesla is the leading stock. It's up 60%. And I know a lot of people think, oh, Tesla sucks and it's going to go back to $50. Well, I wouldn't bet against Elon Musk. It's having a hell of a time with the 200 level, and this 200, it's below the downtrending 200 simple moving average. I wouldn't invest, or suggest to get long, but it's just going sideways and digesting the gains. And they have their investor day this week. Maybe it'll tank. Maybe it'll go back to $50 like the shorts want it to. But I just wouldn't bet against this guy. He's a tremendous CEO. Whether you like him or not, he's done amazing things with Tesla. Anyway, enough of that. Ferrari is another stock in this group that obviously has done very well. Believe it or not, even though this looks, like an outstanding gain, this thing pulled back to its 21. The Tesla has actually advanced more than Ferrari this year. And then this is my dyslexic chart. Stellantis, which is opposite of Tesla, I guess. You just kind of reverse the S and the T, and you can see this one has made a nice cup-shaped pattern, strong relative strength. It's been up, I don't know, 5 weeks in a row. So this one looks good as well. And it makes the Alfa Romeo Maserati. And I guess, those Lamborghini, the high-end cars, people are buying them, people with money, not bothered with inflation. So you see that in retail too, the Louis Vuittons and the expensive retail's doing well, with the lower ends not doing quite as well, like the Dollar General too. Those aren't doing as well. Anyway, I'm going to get to retail, but first I'm going to get to some biotech stocks. This one gapped up on news of a new drug, multiple sclerosis. They came out with some data last week. It's really good drug, but launching a new drug is very risky and it's highly political. And we'll just see how this one does throughout the year. I'll monitor this one, but it had a big move and it's retraced, 25% of the move. So they have earnings this week. We'll see what they say about the launch of their new drug. Highly speculative play. It's been really strong in 2023. And they're just going to have to execute the launch of their new drug, and we'll just monitor this. Speaking of new drugs, the anti-wrinkle cream from Revance. This is the Botox competitor, and they have earnings on Tuesday as well. A lot of earnings this week on Tuesday, but I just wanted to point this out that it pulled back to its 21 and found support after this massive gap higher on January 9th. Yeah, 54% move. That's a nice move. And anyway, so that's one that I wanted to take a look at. Revance. I'm going to get to some of the gappers later on because they have been failing miserably. NVO, this one will be on our watch list as well. It's got a flat base pattern. Probably see it better on the weekly. Just a 5-week flat base in here with the 3 weeks tight pattern. They had an inside week last week. You know, I would say that's about as flat as you can get, down 0.02%. Last week on lighter volume, way lighter volume. Anyway, I like this one a lot with their weight loss drugs. And then you can see it's had a big move. And if you just go to the monthly, you know, lower left to upper right, that's a trend that any trend trader is going to love for years and years and years. That's what you want to do as a position trader. Just buy it, hold it, you know, go through those earnings reports every quarter and every year and just watch your money grow. So that's a nice one. I did want to get to CPRX because this was one of my top stocks. It had the one drug and then it bought a drug from a Japanese company. So they now have 2 drugs, but Teva Pharmaceutical, you know, is challenging their patent. So they're in litigation. And, you know, I would think that the FDA would side with the Catalyst and they're going to defend their patent, you know, as companies spend a lot of money doing R&D and developing drugs, and you know, you just can't come and knock off their drug. I mean, that would defeat the purpose. But until they get a favorable decision, or if they get a favorable decision from the FDA, this thing's going to go right back through 20, I would imagine. But if they get an unfavorable decision, then it's going to go down because they only have the one other drug. And that's only licensed in the United States. The Japanese company has the rest of the licensing for that drug. I forget the name of it, but it doesn't matter. This is what you call, you know, opportunity cost. If you're just sitting in this one, it's going to stay flat until that litigation is, you know, delivered. And I'm thinking the FDA is going to side with Catalyst in this. But Teva, you know, they did this with AXSM as well. Sent them a letter challenging a patent on one of their drugs, and this one has sold off since too. But you know, they have more drugs in the pipeline than Catalyst. But we'll just see. You know, it's a kind of a crappy thing that Teva's doing. You know, but you know, if you're a consumer, you know, it's great because you know you get generic drugs at cheaper prices. But you know, as a capitalist, like they're putting their money in developing drugs and getting knocked off. That's poor business practice. Anyway, I wanted to get to some of the retail stocks. If I get off my soapbox here, this is ULTA, just a thing of beauty. ULTA Beauty is a thing of beauty. What is this? Since the COVID lows, you can see, you know, 120 to 520, you know, not bad. This one, you know, little pullbacks here, but man, this is fantastic chart. And, you know, you're thinking, wow, I'd like to own ULTA Beauty. Where can I get in? Well, pull back to the 21. So, you know, wait for the bounce maybe, huh? Next week. That's the way I would think if I wanted to own that thing. Same with ELF. You know, ELF is a stair stepper, classic stair stepper, where it just gaps up on earnings, goes sideways, gaps up on earnings, goes sideways, gaps up on earnings, goes sideways, gaps up on earnings, goes sideways. So that's the pattern, you know, with ELF. So, and then the last one I want to get to in retail. Oh, I lied. It's not the last one. CROX. This one had a gap and then gave it all back. And that's what we've been seeing. And I'm going to get into that in a minute. Great company, great reports. Just, you know, it's stuck between, you know, 120 and 130, big deal. Not going anywhere. Look at this day on Friday, man, on light volume, barely moved, huh? That's a nice tight candle. And you could see last week, it's just trending with its 10-week line, doing nothing wrong. The last one I wanted to show you was Wing in retail. And I'm going to get to more in retail in these gappers because this one had a good report, you know, gapped higher, and then it gave it all back. This is really unfortunate, you know, on a good report, you know, it was up to 193, then pulled back to 171. That's brutal. Anyway, I'm going to get to the gappers now. Let's go to Meta, because my point here is we're seeing a lot of stocks gapping up and then giving it all back. And in a healthy market, you'd see, like in 2020, when you could throw darts at a stock and it would go higher, they would gap up and continue gapping higher, gap after gap, and just continue to run. But now we're seeing gap up and just pulling back. Not doing anything wrong. It's just not advancing. It's just giving back its gains. That's Meta, and that's a big stock. It takes a lot of demand to move all that supply. But Airbnb is another one. Had a nice gap up on earnings in a healthy market. You'd want to see this thing run through 150, and so we could take profits. Somebody's asked me, when do I take profits? I said, when you have them. In this market, when you have them, you take them. Anyway, this one pulled back to the 21, and this is going to be on our watch list because it sold off, in lighter volume the last 5 days after, strong earnings. I think 24% growth and triple-digit EPS growth. That's we'll see if it bounces here off the 21. If it does, we're in business. If not, oh well. You got to have a mentality in the stock market. If this happens, I do that. If that happens, I do this. So just be flexible and adaptive. I did show you Wing. I just wanted to go through these retail. Yeah, Wing, terrible. Boot was another one. Boot Barn, had this nice gapper on earnings on January 26th, went up to 87, and now it's at 75. Just gave it all back, sliced to 10, sliced to 21. We got a downtrending, moving averages here, and it's just weakness. Just a tough tape, with the market pullback. Most of the stocks are going to pull back. Here's Roblox. I do not care for this stock, but it did gap up, 28%, but guess what? Gave it all back. Pull back to the 21 is actually below the 21 now, but 9% above the 50. So yeah, just a gap higher and giving it all back. But you can see the downtrending 200. This is a stock in a downtrend. Pulte Homes, the home builders were doing great, and it gapped up and just gave it all back. Sliced to 10, sliced to 21. We're seeing this over and over. And it makes it tough. That's why, when you see these spikes, I'm not telling anybody to do anything. This is not financial advice or recommendation. But what I do is you got to take some profits along the way. And that's what I do. You can do whatever the hell you want. But you can see this one gapped up. This is a line, medical product stock for the alignment of teeth. Went up to 368, now pulled back to 306, It's just back to the 21 though, and I'm watching this for a bounce. Maybe it'll bounce and maybe it won't. Really, the market direction really has a lot of weight with a lot of these stocks. This is WNC, Wabash National, Transportation Equipment Manufacturing, and it had a nice gap up and gave it all back to the 50. It was up to 30, now back to 26, and just we're seeing this over and over again. I could do this all day. Rocket Mortgage, of course, you've seen their creative advertising. Went up to 11, now back to 7. So that's we want 7-11, not 11-7. And then the last one I showed you was CROX. Just gapped up on earnings, gave it all back. 143 to 118 in 2 sessions. So that's just kind of the way the market is right now. Couple of other ones that I wanted to show, because not all of them are failing. This is New Relic. It gapped up higher. It gave some back, but it's still above the 21 and above where it gapped from. This thing gapped from 64, and now it's at 72. So New Relic is holding in there. I showed you TGTX. This one gapped higher, and it's holding its gains as well. But it's got earnings this week, so we'll see what happens there. And then AIT, Applied Industrial Tech. This one gapped higher from 139 now. Wait a minute. 132, 123. Okay, now it's at 138. But it's still hanging around the 21. It's holding its gains. I would say that is holding its gains. LPG is another one, gapped higher and it's holding its gains. In fact, it found support at the 10. It's making a move higher. So that's another nice one. And Revance is one that I showed earlier. This one gapped higher, and this one's holding its gains, getting support at the 21. I wanted to show a couple of other stocks here. This is URI, gapped higher. And this is really a strong stock, and it traded to the 21 and found support. And that's been a theme. That was a theme last week, just with the stronger stocks, because a lot of them just followed the market and crashed and burned. Anyway, I've gone way too long with my weekly report. And, this week we'll end February, which is seasonally a weak period, and we'll start March, and maybe we'll have a little better market. Maybe the pullback will see the 50% retracement. We can get a little traction this week. There are quite a bit of earnings news out there. And of course, the inflation data and the jobs report this week, all sorts of noise for us to not pay attention to. Anyway, that's my weekly review. Thanks for watching. We never give up.